Chris Dover here, head systems trader at Macro Ops, and I am here to help you. Well, I got a request about showing my losing trades, so let's jump right into that. First things first, I'm starting to do a lot more of these videos. Like and subscribe. By subscribing, you'll be notified every time I release a new video. And if you ring that little bell down there, ding, that's the sound that people put on YouTube. If you ring that bell, it'll send you an email to notify you that a new video is out. So if I'm putting something out that's really timely, definitely check that stuff out. If if it's important to you that you get this sort of stuff. I love all the feedback from everybody. Please put your comments down below and hit me up on Twitter. So that's what we're going to talk about today. Is a question I had. Why don't I post my losing trades? And I do. Basically, if you're following along on YouTube, I've only put in a handful of videos on here and on the Fallible channel and whatever. But if you follow me on Twitter, and I will make sure that you do, Chris D Macro on Twitter. Follow me, hit me up with your questions if you have any thoughts, insights, or anything like that. I share my stuff there. I pretty much put all my stuff out there in real time. Sometimes I don't exactly catch stuff in real time, but lately I'm doing a lot of day trading in real time. And though I am in Mexico for the month, I'm not able to get the best internet, so I can't stream my stuff. Maybe when I get stationary, I'll be able to stream stuff a little bit more. But anyway, I like to share. I like to pass on what I'm doing in real time, so like you can see it. I'm not trying to hide behind anything. I'm sharing things here. I'm not trying to convince you to do anything you don't want to do. Follow my stuff. If it's useful for you, use it. If it's not, move on. No worries. But the way I get better at getting information to you is by you giving me feedback and asking things. So, ask away. So let's get into a trade that I actually stopped out on this last week. And it is the Aussie yen. And I'm trading my failed breakout scenario here, which is these Keltner channels are the shaded area and the jagged stuff are Bollinger Bands. The only thing I did was I just changed these to step lines as opposed to regular lines, and then just adjusted the colors on them so that they stood out to me. I don't, you don't have to do it this way. You can do it any way you like. It just works for me. It's just easier for me to see it rather than just out of the box. So I'm not making any adjustments to the parameters or anything. It's just how I trade it. So what it is basically we have compressed volatility, and that's represented by the Bollinger Bands moving inside Keltner channels. That shows that price is compressed, and usually what happens is you'll have compressed volatility and then a breakout of volatility. So we had a big move here, and then we had that close above. This is my first warning that I have a setup. This next one was my signal bar. It took off. Bulls could not maintain control. Bears came in strong. And so I would have been looking to short a tick below this one. There was no fill, and also the distance to the midline was not greater than the distance from the top to the bottom of this bar. So I couldn't have taken this trade. But the next day, it had a nice inside bar. So I put a sell stop below here, and I'm looking for a profit target down to the midline with my stop placed up above here. So how this works, I get in, I'm immediately filled. There's nothing in my stats that tells me that immediately getting filled and heading in my direction versus immediately getting filled and not heading in my direction is going to play out perfectly. I mean, people say it works that way for them. I don't, half of them do, half of them don't. I haven't noticed any pattern there. So you just know that it's going to, some days you're going to hit it right away, and other days it's going to take maybe a week or two for your profit to hit. So right away I'm feeling pretty good. It's in there. It's heading my direction, and even further the next day. So it's getting, I'm getting in the money. I'm making a couple bucks here. So I'm feeling good about it. And I also have a Euro Yen short, and I'm short the pound at this point in time as well. So I have 3 short positions. all heading in my direction. I'm feeling pretty good about myself. And then this happens. So I have this reversal candle down here. That's, in price action, this is more of a indecision candle. Bulls are fighting, bears are fighting. Who takes over from there, who knows? And then we put a bull candle in the next day. So for me, bulls are starting to take control. No worries, this is a reversal of a breakout. 80% of breakouts fail. So while everybody is chasing these big mega breakouts to capture these big moves, they only have about a 20 or 30% win rate, which is why trading is so hard, because everybody's chasing those big winners and they're leaving the simple, easy trades like the mean reversions on the table. Well, I do the opposite. I like to trade mean reversions, especially when we're in a mean reversion regime. You can see we're just kind of sideways, little trend, sideways. So for me, this is signaling I'm just going to stick with my mean reversion setups, and here we go. Okay, now the thing about this, my stop is a tick above the bar high here. So 75,629, so it would have been 75,630, a tick above. Now I wait for the bar close for my stop out. And a candle like this is a good example of why I would do that. You can see it went above this one and then does that, it comes all the way back down. So through all my back testing and all my work, I know that that works for me. It's not for everybody, but that's the way I like to do it, and I'm comfortable with it. If you are not comfortable with it, don't do it that way. Figure out what works for you. This is just how I trade. Okay, and then finally on the 22nd of December, I got stopped out. And that was that would have been a, so that would have been a negative 1.1 R loss, because R is the distance from here to here, my risk. So that would have been, on a $100,000 account, that would have been an $1,100 loss, for example, because if I'm risking 1% on a $100,000 account, that's $1,000 that I would have lost. Not a $1,000 position, $1,000 is my stop loss. And I let it close above it, so I take a slightly higher stop than I normally than the 1R, but I do that because it keeps me in the trades that eventually do work out, especially when you're talking about mean reversion. So what am I thinking here? Mentality of a stop loss, no problem whatsoever. I know that 80% of breakouts fail, so if it doesn't fail, it's probably going to take off. So I'm good with that. My win rate is somewhere from the 60s to 80% win rate area. At different times, right around 75% is about average for me on this setup on my system. So I know that out of every 100 trades, 25 are going to be losses. This was one of them. What happens? What are characteristics of those losses? A lot of them take off and run. And it's important that you take your stops, because if you're trying to mean revert trade and you're taking a big massive runner, it's no fun. It's no good. So I want to be out of those. And then ideally I want to be long those that work, but that didn't happen on this one. So I stop out here. Next day, a little bit of indecision, and I'm like, well, we still haven't gotten above the new high, the swing high back here. Can't seem to do anything here. Maybe it's getting weak. Doesn't matter, I'm out. And for good reason. Look, it just kept going. And so we had our vol breakout, our buy stop, a little bit of weakness, and just straight up moving from there. So the Aussie's on fire, and me losing $1,100 on a $100,000 account here versus $2,500, $3,000, because I'm hoping and praying that this 80% will work in my favor at that time. That's not how statistics work. You just need to know that they are there to help you, and you adapt accordingly. Okay, so the next thing I want to cover is where to place my stop. A lot of people will put a stop up somewhere up here because it'll be obvious that they're a loser if the trade's a loser if it goes above there. That's fine, but the problem with that in my system is I want big position size, because I have a high expectancy system with a high win rate. So I want as many trades as I can get, and I want them to be as big as they can. If I'm risking 1% on a $100,000 account, that means if I short from here to here, let's call it $100,000 short, basically I can only do $100,000. Whereas if I do it from here to here, that's a $200,000 position I can take. So now if it moves to my target line, I can make $2,000 on my money as opposed to $1,000 on my money, or 500 or whatever, right? So that's why I place so much emphasis on position sizing and on where I place my stop. I can't size my positions correctly if I don't know where my stop and my entry is, or the risk. Okay, dealing with losing trades. Look, you're going to lose at trades. It doesn't mean that you're a loser. It means, especially if you have a system that you have manually back tested and you've traded and you know how it works, a losing trade is a losing trade. It is no different than a winning trade. It's just part of the plan. There's no ego. There's no issues with taking trades that are perfectly set up, meet all your parameters, sized correctly, and go against you. You just know that of the 1,000 trades that you're going to do this year, 250 of them are going to lose money. So just knowing that means that you can actually trade accordingly, right? Like you just know that, okay, cool. Well, I'm going to have a winner next time or the next time or somewhere around there. Understanding that is important. Now, if you're just taking trades because, oh, this looks like it's going to, I mean, let's just pull something up here. Let me go to a place in time. Let's just do 2017. That way I'm not guessing. Okay, so if you're just seeing this chart right here and saying to yourself, okay, well, we saw that one already, so let's pull that there. If this is what you're seeing on the chart and you're saying, oh, that's a great trade, that's a failed breakout, I'm going to go long right here with a buy stop above this one. Nope, no fill. Okay, a buy stop above this one and a stop there. Cool, stopped out. But if you're just seeing this and saying to yourself, oh, this is going down, I need to get short this thing, and then it reverses on you, and another reverse, and you're like, crap, I'm out, and then it goes lower on you, and then another lower, and then, like, if there's no rhyme or reason to your trading, then taking losses and having stops are very painful, because it's not, you don't have a system that you've mathematically proven or disproven. You don't have a system that you've done the work on. You're just looking at candles thinking, I need to get in this, or I just saw something on the news, so this is important, I need to buy here. And then if you are wrong because you made that incorrect, you didn't have a fully tested system, you were just taking the trade all willy-nilly, then it doesn't really, it is actually like a failed trade. You failed at that because you are taking your mind and there's no rigor to it. You're just applying it to, oh, I just got short here because it looked like it was going shorter, and I'm smart, so I can learn that, or I can decipher that this is going lower, and that's not actually the case. It's irrelevant. So if you don't have a system, you don't have all the parameters back tested and quantified, then taking stops is a lot harder. Okay, because your ego is tied up into that, because it's your intelligence that you are wagering on these trades. Whereas if you have a fully tested system, you're not wagering your intelligence, you're wagering your ability to do statistics and correctly enter or exit your trades based on that system, okay? Let's talk about why I use end of bar stops versus intra-bar stops. A lot of people will, most people, and I recommend you use just as basically you put a stop there, and if it ticks to it, you're out. So you'd have taken this would have been a 1 hour loss as opposed to a 1.1 hour loss. For me, because I've got thousands and thousands of back-tested trades along with thousands and thousands of live trades using my different systems, keeping track of the statistics, I know that yes, I may take a 1, 2, or 3 hour loss occasionally. They happen. I think I've had a 2 hour loss at least once this year. So instead of losing 1,000, I lost 2,000. But if I'm making, and that's on a $100,000 account, let's say, just for ease of numbers. So if I'm making 70 to 80% of my trades winning, and I'm making on average 1.5 to 2R, and I'm losing, a little bit over 1R on every trade, I have one that goes against me, whatever, not that big a deal. Like you can make it back over time. But when you have, like, if I put my stop right above here and the next candle just takes off and then turns down here, well, what is that? I got stopped out on a trade that eventually could have gone in my direction. It didn't in this case. So let's have a look at the pound, and let's get into this one a little bit too. So I had, and I think I've covered this one before, but we had compressed volatility here, and the pound broke out, closed above. I was looking for a short, looking to want to get short on that one. And I did. I barely got filled. So you see what happens, it ticked just enough to fill my trade short and then move back up. Okay, cool, no worries. I know what's happening. That's normal. Next day, you see it did go above my stop, but it came back in. Okay, no big deal for me. That's fine. Some people would have exited, and you'll see that that would have benefited you on this one, because now we're starting to get close to news, but I have this beautiful failed breakout setup, and I'm very comfortable with this trade. A lot of people got stopped out and maybe got stopped out again, but that looks to me like a short. And now I got stopped out. You can see that this was where I wanted to get out. And it closed above it, so I took probably a 1.5 R. Let's call that a 1.5 R loser. That's a big loss. Normally it's about 1 R that I lose. So I got a 1.5 R loss. No problem, because what's happening? We're in an election. Now at this point, I'm really kind of pissed at myself because this comes down. But when this, and it hit fairly close to a 1 R winner, but it rips back up. So either way, I'm pissed, but nothing. And then we have that massive news, the election comes out, and this thing just rips against me. So I'm a little perturbed here, but that's okay, because I didn't lose 1, 2, 3, 4, 5, 6, 7 R. I took a 1.5 R loss. And then I have another setup here. So finally, I'm like, okay, cool. My trade went to work. I put my shorts in here. Got short, placed my stop above here. Okay, that's gonna do that. Place my stop above there, tick above that, and immediately this thing heads in my direction. So I could have got into this, taken $7,000 on a $100,000 account, a $7,000 drawdown, only to come back and make me about $1,000, maybe $2,000 if I'm lucky. Or what I actually did, maybe even 3 if I'm lucky. What I actually did was I lost 1.5, so $1,500 on a $100,000 account, and then because of the new position sizing and the new entry, I made 1, 2, 3, 4, 5 R, and I actually stopped out this week on a trail stop. So as you see, it keeps going there. I put my stop up in here, and was that the one I did? I think, no, I must have gotten out today. So that gave me a full 5 R of profit. I lost 1.5 R. Instead of taking a 7 R heat to make 3, I made a total of 3.5 R, and I took 1 loss and made a great, beautiful trade where you can even add to a position like that. Okay, so that's how why I'm using intra-bars and not. It worked against me a little bit, but it really worked in my favor. Like, I could have been like, oh, this is nice, but it really worked in my favor here. So, so anything, let's just get to what the final thing that I talked about was price action at the top. Price action of why I place stops. So when you have a breakout here and it goes higher, remember 80% of the time they fail. But this one didn't want to fail. It was running. It was 129 to 135 on the pound. That was a big move. But when it failed to hold it and had this reversal here, to me, that's saying, okay, I know there's a lot of people who got long in here, probably in here even, who are kind of down and worried here. When this thing starts to drop, especially when it got below this big one, it's going to continue to go pretty well. If I'm wrong and it rips higher, I know what I'm into. I know it's a trend. I know this thing's going to keep going. We could see 150. We could, have a special day of mourning for shorts. So I need to have my stop in place because I could be wrong. And if I'm wrong, I know how many times I'm wrong. And so it's rare, that my setups, I should say, I know that my setups 3 out of 10 times are going to miss, and I'm going to get a nice runner. So I want to be out of those when they happen. Let me take a look at my notes here. Furthermore, I don't trade stocks. I do a little bit on my equity earnings strategy and my monthly ETF positions for IRAs, but as far as day trading, so I'm not going to cover that. I got asked about slippage, like major anomalies, like a gap up open, stocks getting halted. I don't, again, trade stocks, so that's would be not all that important to me, but I will cover it. And then, let's see, that was more about adding to positions. So I think that pretty much covers everything. If you have any questions on how I deal with stops and where I place stops and the mentality behind it, put those down below, tweet at me, ask me your questions on stops. That's just it. I definitely want to, reinforce that I'm not claiming that I'm the smartest person in the world of the market. If we had a big move, big move here today on the pound, you ask me why we had a big move on the pound, what's the news? I'm going to answer I don't know, because I don't watch news. I don't care. It doesn't do anything for me. I'm not thinking that, it's because interest rates or Jerome Powell is talking this or Trump tweeted this or any other thing. I don't have any, it doesn't matter to me. I just have a setup like this, and I'm like, understand it doesn't matter what the news is. I don't care. They won the general election. Boris Johnson's party, they won the general election in the UK. So, and then it reverses. Even though it's super bullish news, at this point in time, it's suddenly not bullish. Like, who cares? I had a setup here. I had a setup here that didn't work. I had a setup here that really did work. That's it. That's the only thing I need. I don't care. Like, it doesn't matter that I'm shorting this really great news for that party. I'm not. I'm just saying great news on reaction to the movement, not great news that it's great for the UK or anybody. I don't know. That's not my job. My job's to trade and make money. It's not to try to think about what the world's going to be doing. I just need to know how to trade and make money, because that's what my real job is. I'm not hired by my bank account to come up with news and headlines. It's my job to just make money. So when a move happens, the last thing you're going to get from me is, what just happened? What's the news? I don't care. It has no effect on my trading. So, I pay attention. I watch the news from time to time. I pay attention on Twitter, but I don't come and make a trade based on any of that. That's preposterous. There's no way to quantify any of that. It just doesn't work. So, like and subscribe, everybody. Share this out. Ask questions in the comments. Tweet at me your questions, comments. Follow me on Twitter, Christy Macro. And hey, have a great trading day.